Good morning, good afternoon to my friends in Europe. It is Mark Sebastian. I am your only option, and this is the Option Pit Ticker Highlight Show. In today's show, we're going to be breaking down the SPX. We're also going to circle back with Coinbase, which didn't have a trade last week, and see if things have changed a little bit. But before we get into that, I want to remind you what's going on with Zero DTE. For the first time ever, we are offering an annual subscription to our Zero DTE service, and we've enhanced it with the ability to double down. We've built our double down meter that tells us on the days that we want to go hard. If we had done this for the first half of the year, we would have increased our returns by over 50%. We're very excited about it. This Thursday, during our next session, I am going to be teaching everybody how to use synthetics to close positions without day trading. And you're saying, what are synthetics? You don't need to know, but I'm going to you don't need to know, but I'm going to show you exactly how to use them and how you can effectively trade the way you want without having to worry about pattern day trade anymore. So what I'd like you to do is reach out to my team, 888-872-3301, and ask about how you can join Zero DTE. And if you're already a Zero DTE member on a monthly or a quarterly, give them a call. We've got a special price for you. All right. With that out of the way, let's dig in. So let's start with the S&P. And I, in my letter, talked about, some of the risks I see. I need to refresh this guy because indexes are not updating. 1 second here, folks. There we go. Now, today, the SPX is up about 15 points, 0.3%. The NASDAQ is down, and the Dow is up big, almost 1%. Big move out of the Dow. When you go into like the fundamentals of SPX, there really aren't any because it's an index, right? But, and I pulled this up, was the historic PEs of the SPX. And this is something you can just Google, and there's all kinds of ways to look at it. And, we've had the PE get higher, but it's typically, this is a trailing 12-month PE. It's currently 28.44. Now, it has gotten higher, but I want to point out when it gets higher. It gets really high when we're in recession, right? Because the trailing 12 months stink, but we're anticipating that it's coming out of it. And so you get some traders betting that, those earnings are going to turn around, or more likely stocks don't sell off all the way because people know the inherent value. Here's another example. COVID in December 2020, the P had shot up. Why? Because the previous quarter's earnings were not great because of lockdowns. We'd had 2 quarters of really bad lockdowns, but people are anticipating we're coming out of that. That P got to 35. We're not in a recession. We're not close to a recession, right? Well, some might argue we are, but I don't think under any traditional metric you would say that we're in recession, because we're not. And so what we're seeing is the highest non-recessionary price earnings ratio for the S&P 500 that I can find. You've got, the 99 was also non-recessionary. There's another time things got blown up. So outside of 1999, we've not had the price earnings in a non-recessionary period this high. And if that makes you a little nervous, well, maybe it should. But that is what I see in the S&P. What's been interesting, and this is a trade that we went pretty hard on in pretty hard on in trading desk. We talked about it, and I put this trade on Delta Strike. The blue line is the Dow Jones Industrial Average, and the green is the the regular candles are the S&P 500. And we are at a historic outperformance level in the S&P relative to the Dow. If I want to look at something maybe that is a little how about this? Just as interesting. This is the equal weight S&P. So this has the exact same components. Just it's not cap weighted. It's cap weighted by the sectors, but not, the sectors are equal weighted, and then within those sectors they're cap weighted. So there's still some cap weighting in an equal weight S&P, but not nearly the same as what's in the S&P 500. And what do you notice? RSP, which is the equal weight S&P, and the Dow Jones Industrial Average have an incredibly tight correlation. If I change this to the diamonds from SPY, look at the correlation of equal weight and the Dow. People don't pay attention to the Dow. They should. It's actually a really good index. It's only 30 stocks, but because of the price weighting, you actually end up with a much more kind of even-handed look at the overall market, because you've got Apple and Microsoft in there, but they're on a similar scale. I mean, Microsoft's on a similar scale to a United Healthcare and to a Goldman Sachs that are also in the index. So you're getting a much more close look at what the overall market is doing. And so here's the Dow. So when I'm looking at what's going on, here's what it tells me is that a couple of things need to happen. Something needs to happen to close this gap. The gap between SPY and RSP. I'm going to tighten this up to 6 months. This gap, it needs to close. How can that close? You can get outperform. If the bull case is you get outperformance out of the Dow, outperformance out of the rest of the other 493 companies for a period of time. And we don't catch up all the way, but we get this gap tightens. Think like, where we were in March when the spread was about 3 points. So you could see the Dow just skyrocket higher. You could see RSP skyrocket higher, and maybe the S&P underperform. Look at what's happening today. Dow's up 1%, S&P up 0.3. Scenario 2, Dow rallies a little bit, SPY pulls back a little bit. Scenario 3, they both fall, but the SPY falls faster. That's the bear case. And that is the way things are kind of aligning and set up right now. I'm going to adjust my lighting because we just got a cloud. And that is what I'm seeing. I also want to address Coinbase. This was our stock last week. I think Alicia's licking her chops on this one when she's looking at it. So I will unshare, but I'm going to allow Alicia to now take a look at the charts on the S&P and the charts on Coin and any other major charts she thinks have applicability.
Look at your RSP. I'm in agreement with you. The RSP has a nice bullish chart. Once it breaks and closes over these most recent highs, it should reach up here 168.39, and then even above there 169.67. So RSP looks bullish for sure. SPX, nice little rally. Median line, it's been flirting with the median line Thursday, Friday, Monday. It's trading now above that median line. We'd like to see a close above there, which is 47.77, 47.78. Watch for a close above there, and we could rally to our previous highs, 5,500, and possibly onto 5,600. Now, as I say, close is always more important than intraday. we could roll over and trade lower. In that case, you're going to want to watch Friday's lows right there at 54.50. That will be some good support. But with today's action so far this morning, this looks to be bull flagging when I thought possibly we could be rolling over. I was wrong. I've been proven wrong so far. The day's still early.
Correct.
Qs right down to support on the median line, trading there today. Nice little pullback right to the median line. I'm sorry, I'm done. We're on SPX. I don't even know where I am. I already did 0ZT.
You know why, Alicia? Because you don't have your hat on. That's why.
I'm automatically, I'm just like a robot. Anyway, the interesting thing, if we wanted to talk about coin real quick.
Yes.
And Andrew, I'll get to those tighter SPX levels. Any crypto people here? Bitcoin down to the pitchfork and support. Today's close will be very important. I'll be looking for a change in trend candle. Ethereum, same idea. Down to the base of the pitchfork, possibly bottoming out here. And Solana. Solana already touched down to the base and is forming a nice dragonfly doji, which is a change in trend candle. These cryptos may be ready to bounce from these lows. Today's close will be very important. So do we want to go back to SPX or talk about coin real quick?
Let's talk coin. Let's talk coin real quick.
On my chart, on my pitchfork, I'm kind of in no man's land here on coin.
It's bumping a pretty major moving average right now.
What are the 200 calendars trading for?
Sitting on the 100-day moving average, Alicia.
Okay, trading just below the 50. Sitting on the 100?
Yep.
Might get a nice little doji there today.
Yeah, we get a doji and we get a little confirmation tomorrow. You'd want to jump in. Yeah,
if we get a confirmation today or tomorrow morning that that doji holds and we open and trade higher, could be time to hop in on the long side. If it continues lower, these previous lows, 196.71 will be the support.
Right. I think Leisha's going to be shopping for some cheap calls.
Before that, though, 209.55 as support on the pitchfork.
All right. Okay.
So here's where we were last week, Monday.
Yeah. We did a good job not doing anything.
Yeah. Okay, Andrew, I'm sorry.
It's all right. It seems that they're kind of selling all of the stuff that's been moving higher. You know, Mark's thesis last week were buying the Dow and selling the SPX. And now it looks like, you know, like the Q is down a bit. Dow's ripping.
The trade I put on in the swap trade Dow S&P that I did in Delta Strike on Friday is up 30%. And that's a pair trade.
Nice.
Pretty good.
That's really good.
For a day?
For a day. And I also laid out the trade to trading desk as well. We talked about it.
No, I remember that.
On Friday as well. And I know some of them got in. And I also laid it out in our pro room. The pro room got it first. Then trading desk and Delta Strike got it immediately thereafter. You know. So I'm pleased as pie.
Pleased as pie.
Correct. And everyone knows pie is pleasing because pie is better than cake.
What flavor?
You know, it doesn't matter, right? Have I ever told you my pie theory?
I just like that crust, right? It's so tasty.
Have I told you my whole theory about pie?
No.
All right, you go to a birthday party, right? And they cut up a cake, right? People calmly and patiently wait in their seats for someone to pass them some cake, right? if I go to a birthday party and I whip out a couple of French silk pies, people are going to be out of their seat in line to eat that pie. All right. A lemon meringue, a couple of nice apple pies, fresh out with some a la mode. People get out of their seats for pie. People wait for cake.
I like it.
My wife makes the
Listen
best
to
pie
ice
in the
cream cake.
country, and just ask her if you don't believe me.
Yes. How about a mincemeat pie? That's not really.
I mince is good for Thanksgiving.
Yeah.
Like, you only serve it one day a week, one day a year, mince pie. We do have a pie contest out here in the fall, though.
All right.
It's quite good.
That'd be fun.
All right. So, Alicia, you got anything else on S&P that you wanted to dig into?
Like I said, this close today will be very important right at this median line. We're testing it now, 54.77. We close below there, and I believe we retest these lows back down to 5,400. We close above it today, we rally and retest the highs, 5,500. Flip a coin.
There you have it. All right. So, Andrew, Alicia, you can unshare. Why doesn't Andrew now walk us through what he's seeing in the volatilities of the S&P, as he is the vicar of volatility and the Viking of the VIX? Or is it the Viking of volatility and the vicar of the VIX?
Maybe I think the Viking of volatility sounds a little better.
Yeah, it's the Viking of volatility and the vicar of the VIX.
Well, this is kind of like, I mean, this is a story. Volatilities are hanging out around here, but all of a sudden we're at, I'm going to say, 1 year lows for realized vol. Here, just look at some of the bigger numbers here. So you're looking at 30-day volatility is definitely a 1 year low. So we have had a very long period of not much happening, which is usually a very complacent situation. So the vol risk premium here, the difference between SPX and what's actually going on from a vol wise, the money, the dollars you pay for options versus what the index is doing is as high as it's been, in a year, maybe 2 years. So when you're looking at a trade, like, I wouldn't want anything, I would be thinking like put spread, put calendar. If we're looking to short the index, something along those lines that doesn't have as aggressive of a theta profile. That's what I'm seeing, because you're seeing like a huge just drop off in volatility because the market has just been kind of sliding upward and there's been really no pullback. So if the SPX is getting a little toppy and we want to buy Dow, like put spread in SPX, call spread in Dow, something like that, or put spread in SPX or a call in coin. I don't know, but look at coin as well, right? We got the same. All of a sudden, coin is right. We've got relatively low vols in here, considering what's been going on. Let's look at a 10-day. So basically since we had a bunch of activity, all these larger candles for a while, we've basically had very small, uninspired candles, which to me is just like folks are just kind of slowly getting out. They're not getting out with any speed, but they're definitely getting out somewhat. So this is like a little bit of a mixed signal, I would say. But because this short-term realized vol is so low, like my first thought would be calendars, like 200 calendars, 205, some kind of put calendar like that. And you could almost go short in them. I don't know how well that pairs off, but I would be thinking anything that's spread calendar wise here, because we could sit like this for a while. and really not go anywhere.
All right.
So-
Well, Andrew, I want to show people something that makes me concerning, and I am going to give a just kind of basic trade because I'm seeing something I don't like.
Okay.
If you want to unshare, I will
I
reshare.
can unshare. Yep. Let me stop. Hold on.
Second here. So I want to point out something important. And as you know, this is something I watch very closely, folks. I want you to notice what's happened since June 13th. June 13th, the S&P closed 54.33. This red line represents a normalized implied volatility. So not quite the VIX, but it's 30-day implied vol. And it closed at 9.53 that day. We're up about $40. And now that number is 1091. So what we're looking at is a correlation between implied volatility and the index. It's not supposed to work that way, folks.
It is not.
One of the things Andrew always talks about, weekly profit cycles, is short, short, long, long. And this correlation is really is a part of that formula. And for vol to be going up while the market is rallying is generally a sign that we're at least due for some sort of pullback of some kind. We're already seeing it kind of take place in the Qs. You know, what we've got really, the only thing holding up the S&P is this fight between the Qs and the Dow. Right? The Dow's up 1%, the Qs are down 0.8%. So what do you end up with? The S&P up 0.1%. The Qs are so much bigger than the Dow in terms of how they affect the S&P eventually. I would expect that, if we get a 465 on the Q, and, just looking at the triple Q, the 21-day moving average would bring us down to about 466. That's $10. Call that 2%. So just another couple of percentage points. That's going to pull the S&P, which is also stretched over its 21-day, down to that 50, that 535.82. So I'm not going to buy an SPX put because one put is $4,000. But if you look at Friday, and we can look at next week if you want. If you want to look at like next Friday, we can do that. The 546 puts for a week from Friday, so these have 10 days, they're only about $3.15. Relatively inexpensive. If you want to lower the cost, you would buy that 546 put for $3.15, and you'd sell like a 538 at $1.15. So you're getting an 8-point vertical for $2. But with vol still relatively low, VIX only 1350 coming off a weekend, I don't really mind putting a leg out tiny. So I'd buy like one, maybe two.
All right.
Of the XSP July 5th, 546, but $3.10 is not expensive.
So is it July 05?
July 05.
546?
Now we do have the holiday next Thursday, so be aware. There's only 8.5 trading days because Friday's a half day, I believe, next Friday.
Yep, and we do have a PCE number this week.
Yes, which should be fun. So the trade I'm looking to do, and I'll type this up in the room here. I'm not going to. Christian, you can decide if you want me to push this out. Oh, you already typed it. Oh no, that's a different one. And actually, you can see in the room below public, I typed in kind of